Hi, good morning. Hey, this is Scott Shooter Henderson, and we are going to go over charts here this morning in our town hall meeting. All right, let me start off with the SPY. Structure. We are doing very well considering what's going on in the Middle East. We're holding up very well. And the challenging part is that, we still face the risk of escalation. And really, the setups aren't flowing to the bullish side, even though we might like them. So right now, we're in this flag. We had a 605.06 high and a 595.54. And I think that ultimately is going to tell us really where we go from here. But I suspect that we do start rolling over and maybe get another push down, maybe towards about 587, maybe another push down, maybe to about 569. Now, what I'm currently anchoring, I'm using this 568.38, which is our 5.2 high. And then I'm anchoring on this wick down at 583.24. And, this is more of an internal trend line. And just so you guys understand physically how I look at things, they're internal trend lines that tend to mean something. This is ultimately our larger, really structural trend support. For those of you who haven't followed my work, it revolves around relative strength, RSI, and Elliott wave patterns and how they combine. And there are two types of lows for me that I want to watch: confirming and confirmed lows. Now, I want to use a confirming low as my anchor. So we do this on this chart going back to 5.4, and that's where we start. And then we anchor our second point based on our higher low. But from a purposes of stops, when I start these trend lines here, what I'm basically saying is we break below this trend line, I would be out of my longs at this point. And structurally just backing up into this trend for a little bit. How this works is you put your anchor for your trend support line on your confirmed low, and then you wait for a back test, and then you adjust your line as you're moving into the trend. And as it pushes up again and breaks out and then breaks down, you get another higher low. You're moving up into that higher low with your trend line, try and keep you in or out of that trade. And you'll note that we rode this entire leg up to this 595.54, and then it broke below there. And that's a pretty decent run if you were chasing this from this particular higher low from 508 up to about 586. So structurally, I find this works very well for maintaining trend support into the trade and tightening up your stops accordingly. But using the trend support line, you can just guess where your price is. So my stop would be 594.26 here if you were using a hard stop, or you can use just a trailing stop based on a percentage of your gain. And usually, in general, how I start off a trade or an entry, I'm using a 50% trailing stop on the entry, and then once I've hit or broken out above here, I'm starting to tighten up on my breakout. So if I had entered here at 508, at 548, I would tighten up to about 20%, just guesstimating what my gain percentage would be. Let's say my gain was $40, right? About 20% of that. So I would tighten up my stop to about $8 because I'm really focusing on trying to keep us in the trades that are working. In other words, letting your winners run. And then when they start breaking down, we want to start trimming and taking profits as soon as they start breaking down, because structurally, I've found no reason not to do that, even on longer term position trades, because ultimately how that structure works is, let's say, for example, you did get stopped out and you followed my model where once you get stopped, or the stop hits or trendline support hit, and you've taken 50% off, you've now tightened up your stop. You may or may not have gotten stopped out here on the other 50%. But if you didn't and you were still holding 50%, then the rule becomes once you break out again, you add that 50% back that you cut until you get stopped out again. Now, in this scenario, it would have been pretty tight. That takes a little more time management to manage it to that degree. But be very candid, that is the absolute best way to manage your positions. You're in and out of trades on a consistent basis, at least every couple of weeks or every couple of months, depending on how long you've been in those positions. But structurally, I think my bias still, outside of the Swan event from the war, is that we break out, we get up to at least 50% back and probably 61.8 at some point, unless we take out this shelf here. This shelf is a very thin shelf, really was tested, but it really didn't hold at the top of the price, so I consider it a weak shelf. And then our next demand shelf is way the heck down at 525. So this breaks, we're going down and retesting this. Might only get to 50% of that at 550, which seems like a good spot where this level is. Has been our prior highs, as far as breakouts going back to early 2024. But that's my thoughts sort of on the SPY. Let's jump over and look at the NASDAQ. Now, what I'm using for my anchor here is 466.43 and 492.70. Now, again, I'm using an internal trend line. I really couldn't find one that, if I came in here and used this internal low, the 9624 low, it's tight. We could do this, use this as your anchor or this. It's a little tighter there, but it really doesn't follow the structure. And what I want to do is try and stay in a trade if I'm long until the structure breaks. So I see this as a better testing ground for lows and a launch pad. So we get back to about the 6218. Right now I've got it flagged to start entering longs, adding at roughly 70.50 and then adding again at 79. And that ultimately I'm looking for that break to get back above this supply zone. UUU is doing really, nice. I don't even think we've gotten the news that we're going to start moving more rare earth minerals processing to the United States. I don't even think it's taken hold. So, my thought is we test these highs. I think we get back around 740. So right now my anchors are 320 and 520. I'm keeping it kind of tight because if that trend break, I want to sort of head out, but I think it's going to get more euphoric to the upside is my thought. Now, initially my target is the 100 fib at 60.48, but that'll likely get moved up to the 150 fib. That's sort of my thought on that. Now, ONDS, we broke trend support. I believe it was the later part of last week. So if you still have that, I'd be trimming unless we break above this line at 174. It did work well twice. Okay, IoT also broke trend support. And we've continued to break down from there. So you would have been stopped out on any trailing position that you may have had. ABIV, we also have been stopped out. However, I like it here. But, when I talk about market breadth, what I've learned is that when the FOMO is flowing and everybody's coming off the sidelines and buying position, the market dynamics, that breadth that's continuing to expand in the tape when we're really bullish, like from this low to here, it just continued to expand and it didn't stop. These are the legs we really want to catch. We really want to avoid this noise that's here because the likelihood is we only do get a breakout maybe up to that 78.6 and then it rejects again. The breadth factor or the flow factor that comes into individual names is important. So we spend a lot of time looking at that. We want to see where the contracts are, how large those orders were, etc. I'm finding I spend more and more time on the flow because it gives me a much more accurate barometer of what a stock is doing. So now move over to a flow momentum trend support. And this, we are testing my first target. My next target is up around the 161 at $50. It is not slowing down, it's accelerating. Now, my original anchor was 31.50. I'm going to say push that anchor up because since I've done it, it's moved a little bit more. So I would say push this anchor up to 33, get really tight in there because I would say that we continue to get some more generals up here. And what I mean by generals, it's these long extended green candles versus trend. This is trend, but you got a real bullish push here. You got followed up with another general, right? I would expect still to get at least one more general up here to push us up and out here. Then we might start flagging and then, maybe get a little bit of a back test. But at that point, we really only want to limit our position in the last leg. But in this situation with MP, I'm totally bullish because I think it benefits extremely from the caps that have been placed on China as far as exports to the United States, and I don't see that change. Now, let's look at HIMS. Now, my anchor I'm currently using is 23.97 and 53.63. Now, I've currently got $60 covered calls on this. However, I expect it to break out. So the targeting initially is going to be this 61.8 around 77. And I'm going to get long. I'm going to start adding longs again here around 65.80 is my thought. But I still like the structure of this. I look at this as mound one. So we're building out mound two. I don't think we get better pricing here. If we do get back to trend support, I get more excited about entering calls. I still want, even with this trade, I still want market strength, but that's my thought. All right, now as far as VIX, it's been emotional here. I closed my $50 cash secured puts. I think a little bit, about 50% of this candle. I didn't catch the whole thing. I think it was like 54.30. I know some of you still have 52 cash secured puts. Some of you might even have 55s. I'm not recalling the notes, but the anchor I'm currently using is 45 and 51. I'm just looking at this flag here. I don't really want it to get below this 51 because then the reality is I see a third drive down here. What I'm referring to is a peaking drive, but it's really a flush to the downside. So I always am looking at this in structure. So this is drive one, drive two. So we potentially could get a third drive. Then I would be interested in re-entering. We get back down around that 46. Okay, now to OUST. It's working. I plan on adding above this 2039. Right now my anchor is 658 and 1345. Now I'm giving this a little more room because of the breadth of the flag. I don't really want to be taken out here. I've got July $25 calls. I'm looking, my initial target is up here around the 1618, around 27. I don't expect for this to pull back. I don't even think we've heard any follow-up news from NVIDIA on how well this partnership is going. But just addressing this for a second, they've negotiated a deal where their LiDAR is on the main NVIDIA board for city surveillance. And they just made the updates available for NVIDIA prior. It wasn't physically attached to the board and all of the new boards that they're releasing. That's now the case as far as AI autonomy and basically monitoring traffic lights, vehicle flow, etc. And I think it's going to open up, once those boards start shifting to more autonomy, I think this has some huge upside. Even though it is a Chinese company, it's still, I like the structure, I like the deal with NVIDIA, and that's my thought. Okay, now WLFC has broken trends, so you should be at 50% of your position size at this point with a pretty tight trailing stop. I get real interested in buying it back at 131. It still really has done nothing wrong. It just didn't have the FOMO to get out of here. And that's, I've shared this in a couple messages in chat, is that, this is one of the stocks that should have continued with any market breadth and gets a little pump and then it fades. Unfortunately, we're seeing that with a higher percentage of stocks, so we have to factor that into our positioning. So let's jump at SNPS. Now that is also broken risk at 50%, but it's done nothing wrong. We're still in this flag, and it's a fairly large flag, which is very bullish. The majority of those break out to the upside. And what I'm doing when I put this box on here, I'm saying, okay, this might last till 7:15 before we break up and get out of here. So from time-wise, when you see these little boxes that I put on the chart, I'm basically saying, hey, this is how much time it could take us before we get a push. But it still really has done nothing wrong. If it does break below, and I'm just going to move trend down here for a second, it does break below this, which roughly is 467 as a number. At that point, I would probably trim my position and reevaluate on where it's going to land down here, because once this is broken, it could test these lows back to 438. And I really don't want to hold this stock for $30 to the downside, is my thought. All right. Now, since we put the alert out on Mongo, it just is totally flushed here. However, it's finding a floor right here. I really like it back here at this 183. I don't know that it's going to give it to me. I will add a position back on a breakout of 210.49 because then this was just noise and it's going to continue going. This was a gap from earnings. To be candid with you, I don't recall seeing this particular flush. This was institutional selling. for whatever reason. Somebody was liquidating a position is my only thought. But I'd like to note that, we're confirming here on this high. And it's the highest point of RSI on the chart. So what do I always look for when we have confirming high? Well, I'm looking for one more higher high in price that's divergent as well. So it would be a lower low in RSI. So I still like the structure and the look to Mongo. And not only that, I think they have a fabulous product. Because all of my data for Sentinel is there. All right, now LTBR, actually broke trend right after we were looking at our entry. We had our entry down here and it just continued to flow. So it was a very short trade if you were in it. If you were running a trailing stop, hopefully you got taken out and you haven't held it through this heat. Now toast, at this point, I like an entry back above this 45.25 at this point, but I still like it because we've got this flag look. This is very bullish as far as the way it's structured, right? As long as this 441.15 holds, I've pulled a little deeper because I didn't want to use this anchor because I think the flag continues to break out. And I think our target is at least $50, 49.86. So the anchors that I'm using on toast are 28.12 and 40.40. And any break above this 43.04, you could actually open starter position. I like a quarter or a half position size up here on a break of 45. Then we get above this high, 45.63, I would be at a full position. Now Rocket Labs. Now we've broken trend support. However, I've got this huge flag. I still think this continues to build to the upside. I think this is just these institutional investors, again, getting positioned for this Iran war. And unless it's running, they're not staying in it. They're rotating out of it. So why would Rocket Labs be any different? So that's what I think this is noise. So the current anchor is 1472. And if you wanted to move risk to that wick down, it would move to 25. I'm trying to get the anchor there, 25.24. It does get a decent bid here, but the candles, this is weak volume. It's not really bullish to me like this, right? Or it's not bullish to me like this. Even this sell candle was followed up, even though it was dumped. You can see where the institutions are coming in and out of this. So I still think our target's going to be up around 33, and then I have a much larger target up around the HUD and fib around $45. And structurally, I see no reason it shouldn't play out. The question is, do we get a better price at $20.42 or don't we? That's really what it comes down. So taking a look at Joby, this is also broken trend support. However, it still is putting in another flag, still bullish to the upside. As long as we don't take out this 844 low, it really has done nothing wrong for it to continue holding. I would see no reason why it doesn't break out to the upside. And I'm looking at this is because this is really wave one, whole leg here to here. This is wave two. This is wave three. This is wave four. So we're going to put it into five. And so I think we do get a little push. Very often do you get a lower high on this kind of a breakout and breakdown. So I see this breaking out, and that euphoria might catch it a bit and push us up a little bit higher. So I'm initially only targeting $11 on this for a continuation of the upside. So if you were going to move your risk down and try and enter here, I don't like it as much as other names, but it's still a viable name. I mean, for cash secured puts, maybe selling something around the $8 level would make sense because I wouldn't mind adding at $8. And then if I ended up having those shares get put to me, maybe down around 730 for the next lot, because I don't think it's going to break and fill this gap here. It just looks too bullish. Volumes just increased way too much on this low. All right, so last week, and boy, did Micron just run. Huh? Jeez. And I didn't have a position. All right, our anchor is 61.54 and 113.66. And I'm going to say kudos to whoever bought this. We are now breaking. We wicked above the gap over here. This gap over here. Continuation. We have another gap up here at 113, right? So, that number at 61.8, I think is totally doable here. Because one thing with the new boards that are coming out, the single push board, is they're going to need more Micron chips on it. So on top of that, what are we doing with RSI? We are confirming. It's our highest high in RSI on the tape. So I'm going to look for, this is what I call peaking drive 1 in the mound, peaking drive 2. We're going to get a third peaking drive, probably a lower high at that point in RSI, but a higher high in price. So I see at least 129 here, and it'll probably push up to that 147. And we may break out above this 157 if we get a lot of bullish move on chip production with boards and etc. All right, look at FDX. It still is in play. However, right now I do not like it until it breaks above this wick, roughly at 230. So I'm using my anchor and which can be used as an entry trigger or a stop trigger. A trend line can be used. So the anchor for this is 238.41 and 228.72. Then I get interested in really chasing this to at least the 50% back to 236 and potentially the 61.8. And I do think at some point, if we get some kind of closure to Iran, the CATs, the FedExes, etc., will start getting a bid, because structurally, once that's gone, the Swan event and tariffs have been settled and we're not doing bad. We're not getting a gazillion job losses. We're not growing at 20 to 30% a month, etc. It really isn't that bad. So structurally, I think this will be a name that recovers, and I have no problem owning it after this kind of a retrade. On top of that, if we look at where our RSI was, the only factor is it's a high and tight bottom as far as I call it. So this was our confirming level. This was our divergence. Really high and tight. And typically we get a bigger bounce off of those looks than not. So let's look at Kroger. Now, I believe actually we have earnings either today after the close or tomorrow. So right now, and forgive me, my anchor's on there. I was using this wick 65, and I was using 62 as the anchor for that risk. Target about 68. We get a decent push from earnings. I think it's going to continue to flow to the upside. There was some consolidation here. I think it was Albertsons that they acquired, and they were streamlining management and stores. That usually is a bullish scenario. It's not a bearish scenario, especially in retail grocery. And on top of that, they've also cut their discount brand, which was very expensive for them to produce, because basically they were spending billions of dollars putting product names in Kroger, and their margin wasn't anywhere near as high as regular retail brands. So that, I think, will wash into earnings as well. So I do expect this to push back up towards at least that 50 fib and continue from there. Now, BP, right now my anchors are 25.29, 30.94. Now, the one thing is the settling of the Iran deal. There's a very good possibility that we flush lower on oil stock, which, would reduce, we could come back and test this 30.25 first. So just be mindful of that if you have a position size. Otherwise, it's done nothing wrong. I mean, we got a nice little flag forming here. It's a little box here, so I would expect that. By the way, when you get a flag, it's usually a measured move from your prior level. So we're looking at this 28 to 31 bucks. So roughly a $3 move to the upside. So, roughly this will break out to about $35, $34, somewhere in this range. So we should test this level at some point. Now, I do have a higher target on BP around 37.72. If oil prices can end up sustaining and we end up stopping these reductions in consumption, because, the demand for oil has dropped globally with this tariff news. So that needs to stabilize a little bit for that 161.8 to occur. But I still like it back to the upside. After a nice flush like this on something like BP, I expect it to get back to this slow grind, which we're already seeing in the tape here. So, the price in an individual stock doesn't necessarily repeat, but it rhymes. It has a similar behavior. So that symmetry is usually duplicatable, just like this extended long trend. That was something different. If that was occurring here, this would be where breadth is continuing to decline. We have fewer and fewer buyers every single week and more sellers. And that wasn't the case here. This was just a boom event, and that was driven solely by tariff. So as that gets resolved, I would expect that something on BP would recover as well. So now let's take a look at STZ, Constellation Brands, I believe. I expect this to continue to break down with any additional market. First initial target would be 42. Now, what I refer to as high beta names, I'm not going through those today because I don't, I see a resolution to Iran. I see a resolution to tariff. So I'm not wholeheartedly chasing this. But if we start getting really weak market moves and it deteriorates, this would be a stock that I would take a position on short just to hold. Go 6 weeks out, 8 weeks out on puts right at the money. Hold, rinse and repeat based on what it's done. And considering that it's actually, my breakdown was here at 169 when I originally posted this. We've now moved almost $9 to the downside since since I opened this as a short position. And, ultimately what I really like about this chart, I'm going to go out to the weekly here for a second, is the flush potential, where we have a complete reversion to the mean here. And that, you don't see that in many stocks. And now I'm going to come back and say this. Why do I believe that? Well, if you look at this low, it's our confirmed low. So I'm looking for at least one more divergent low equal to this push. So from here, 179 to 160. So I'm looking at a $17 move to the downside. So I'm roughly looking at roughly about 150, 154 would be the minimum push to the downside. But I also can see this as A, this is B, and we get a C with equality. However, I will say that after an elongated A, which this is, A would have been equality, which would have been this leg to this, right? It went past extended and did the final flush. So this is elongated. Quite often this is a flat. So we could end up around 152. It's still viable. But we'll get that when we see the divergence occurring in this low, because more than likely we do get some kind of divergence. All right, now looking at T-Mobile, it just failed. Didn't work. This is another one, got a little bit of a bid, thought it was going to continue to build out that flag, and it just absolutely rejected. So I would be out. I wouldn't be holding that. ET still has not broken trend. I'm using 1742 and 1460. That break, I'd be down to 50% back. This does look like an ABC to me, A, B, and potentially C. However, demand is just continuing to grow here, and this was an oil name, so it breaks that 1742. I'd cut, and I'd tighten up my trailing stop down to roughly 20% of what your initial risk was. I wouldn't risk more than that if that breaks, but I would still think that we bounce and we tag at least the 50% back unless the Iran deal completely wins. So now looking at UPST, we come down to the daily here, we get a cleaner vision. Right now, I like this for continuation to the upside. However, I also think it rejects price right here. So breaks below trend support here, and let me bring my anchor in, roughly about 55.64. I think we got a shot back down here at 27. This is what I would refer to as a high beta stock. Now, what I'm going to do once a week, I'm going to do what I consider a short option with one or two names just because of market conditions, because we're up around 6,000 in the S&P, and I expect that to break down a little bit further unless we get the break. I mean, the FOMO right now and the dip buyers are strong. I'm basically a counter trend guy. I like to wait till we get our push, get an inside bar, whatever the trigger might be. I like to take a shot at this short from highs like this. So 54, I like to take a back test down to about 43. So I like to trade these peaks and then catch these flush to the downside. It's just where my love for trading that gives me that euphoria, which is why I like to stick there. So that basically is my review for the day. Until next time, folks, thanks for joining me. Great trading.